And hello, welcome everyone here to Ichimoku Strategies here, Ichimoku Trading. And this is Chris Career, secondphaseforex.com. It's doing a class with FX Street. And I want to thank them for hosting this here. It's good to have everyone here. And we are going to go ahead and get in. We got a couple questions that actually started off right off the bat, so I want to address some of these questions. Before I answer these questions, I want you all to feel just as welcome to ask questions that you have. This class is not for my entertainment, although I do get entertained by myself, which is really strange. I did remember one person saying, though, you better learn how to entertain yourself or amuse yourself, because if you don't, you'll leave yourself at the mercy of others. And so I'm just fulfilling that request there. And so, but this class is for you. And so with that being said, this education here is for you. If you have any questions on what we're talking about, feel free to ask at any time. I do hope that you can keep the questions focused on the subject material of the class. Although I'm probably pretty good at Trivial Pursuit and a bunch of other things, I'd like to keep what we're talking about focused on this class, Ichimoku Trading. So we are going to go ahead and begin the class. All right, so first question comes out from Harry. Harry says, Chris, you said Ichimoku and MT4 is not correct. And yes, I am saying that. And that is because this is my analysis and this is my thinking. I've actually tried 3 separate platforms on that. And I've gone over this many times before. I've tried this on 3 separate platforms and tested them all to the MT4's readings. And all of the 3 separate platforms were almost identically to each other, but the MT4 was slightly different. Why is that? I don't know entirely. I'm not, I didn't design MT4, so I don't have the coding in behind that. I would like to talk to somebody at MT4 and find out about that, because I think that is something that would be, can be easily fixed. But my guess is it either has to do with one of 2 things. It either has to do with the, actually one of 3 things. It could be that the server time that the MT4 is based on is radically different from mine, and if it's that far different from mine, then we will be getting different readings. That's to be expected. That's option 1. But if that was totally the case, the other platforms, which also had different server times, would have showed vastly different readings as they did from mine, and that wasn't the case. They all showed as closer readings to mine than they did the MT4. One other possibility is that the not the server time, but the calculations from which they were coded in terms of the actual formulas were slightly off or slightly incorrect. That is a possibility. I mean, those are coded a long time ago, and I'm not sure if they've updated them by any means. And so if they, that was coded way back. I mean, we're talking anywhere 2002, 2003. So with that being said, not a lot was known about Ichimoku. It's certainly possible they could have just misinterpreted the calculations and never changed it. That's one possibility. So those are some possibilities as to why. And so with that being said, from my experience, I think they're not totally accurate. Are they drastically different? Not huge, but to me it's enough. So with that being said, that's my thoughts on that. Jenny says, Chris, could you show us a trade you lost money on using the Ichimoku? I could if I had prepared for that. I didn't prepare for that. And I would actually have to divert a fair amount of time to going back, first finding a trade that I lost on, and then finding one that was specifically using the Ichimoku system. So I could do that for next week's class, and I'd be happy to do that for next week's class if I had time to prepare for that. But in my preparation for this class, I came up with something totally different. And so it's a great question, Jen, and I'd be happy to. So yeah, let's do that. Let's do that for the next class. If you're willing to wait for that, that would be appreciated. So it's a great question, and it's something I think we should look at, absolutely. Okay, so what is today's class focused on? Today's class, the main theme is going to be focused on understanding trending environments in relationship to the Ichimoku Cloud and its individual components. So trending environments, their characteristics within the Ichimoku Cloud. And so for those of you that are new, feel free to let me know so I can adjust the material based on that. But one of the main and simplest methods that the Ichimoku Cloud uses to verify a trend is it basically talks about price action's relationship to the Kumo. If price action is below the Kumo, then we're in a generally bearish environment. If price action is above the Kumo, then we're in a generally bullish environment. There are other factors that would have an impact on that would further amplify the strength or weakness of that clarification. One of those would be the time that we are on one side of the Kumo or the other. So, and that's a tricky subject in the sense of there's so many different time frames. There's no way it would be appropriate, one time would be appropriate on one time frame and then not another. So the amount of time that we are on one side of the Kumo can have an effect and actually make a statement in regards to the strength or the weakness of that trend. Obviously, the longer we're on one side of the Kumo, the better. The longer we are on, below it, the stronger the strength of that bearish, or the greater the strength of that bearish trend is. The longer we are above it, the greater the strength of that bull trend is. Okay, now one interesting thing is we'll actually kind of see that highlighted in here. The euro dollar has been falling for quite a long while, for those who've been following it, from 151 and a quick dash down to 138 and a half. And it's only had mild corrective waves to the upside before it just began another series of selling. You can see it here, selling off, and we have this slightly corrective move. And look what happens. We have a brief foray above the Kumo here. Very short, limited in time. And then we sell back below, and we're below it for a long period of time. And this move right here. Now, if you had to look at these two moves right here, does this move have any similarities and characteristics to this move right here? And if they are, and do have similarities, what would you say those similarities are? You can talk about it in terms of how price reacted to the Kumo, or to the Tenkan or Kijun line, or whatever. But if y'all have been, looking at charts. Many of you have been looking at charts for a while. Some of you may be new, but some of you have been here for a while. I know some of your names, years now. And so with that being said, what would you think are some of the characteristics that are similar between this move from here to here and this move? And Jenny said, Chris, could we see 4-hour and daily on pound US dollar? Sure, we can do that once we finish up with this example. Yes, we could, Jenny. Let's just get through this one here first, though. Okay, so anybody have any comments? Do you even think that this move has similar characteristics to this move? Any comments on that whatsoever? This is a challenging question. It's a tricky question. I want to see if anybody can get the answer. Or if you guys are all half as tired as I am. And we're out all weekend. Wow, no answers whatsoever. There's either no brave souls, or my question was just so cryptic that y'all couldn't answer. None whatsoever? Nobody wants to take a guess? Come on, I got some veterans here. Veteranas. Ask again. Wow, impressive. Nobody wants to go for it. Okay. All right. Ye of little faith in yourselves. Well, first of all, there's definitely some characteristics. One, the angle of the move is relatively similar. If I were to draw an angle that would kind of define some sort of trend line here, and duplicate this here, moving on over, the angle is pretty similar. Angle is important when measuring price because it tells you the strength of commitment or lack thereof in buying and selling pressure. So the angle on these are relatively similar, meaning that there's not heavy commitment. It's mostly corrective in nature. The market's not, putting down heavy numbers on it. It's more of like there's some profit taking and maybe some oversoldness in the euro dollar that's causing these moves. So nothing extravagant is really forcing them. If they were, the angle would be much sharper. but the angle is relatively flat. It's decent, but it's nothing special. It's nothing to make a Van Gogh out of or anything like that. 2, other similarities. Both of them have spent a lot of time breaking through the Kumo. And these Kumos weren't exceptionally thick. I mean, this thing entered the Kumo a few hours before London. This gray line represents the London Open. And it didn't exit out till 2 p.m. California time. So you're talking well over 14, 15 hours later to break through a 1-hour Kumo. That's also not convincing. Contrast that to this little move right here, which started another round of selling. That took a whopping 1.5 hours at best. And maybe the Kumo was half as thick. So if we were to double the Kumo, it should have taken maybe 3 or 4 hours. This took well over 15 hours. So there is a similarity in terms of how long both moves are taking to punch through the Kumo, and they're not necessarily punching through with vigor. There's not much force behind it. So that's number 2. The third thing is that when it broke through, instead of it kind of breathing a new fresh of air and climbing high to the upside, the pair just went sideways. And that's kind of what we're seeing here. As it's starting to break through here, it's not like taking off or anything. It's just trading sideways now at this point here. So we're seeing some similarities here. With that being said, based on how the trending environment has related to this pair and time frame before and this Kumo, there are a lot of suggestions here that this move is right here is very similar to the move right here, and that we may be starting another round of selling sometime soon. So one of the things we look for to identify trending environments is the time above or below the Kumo, what it does when it punches through the Kumo, how does it respond, when it punches through the Kumo, how much time it takes to punch through, angle. All of those things really clue us into information about where the commitment is for this pair, or where the line of least resistance is for this pair. All very important stuff to understand. Now, one of the other thing is about trending environments, and we're going to move on to Aussie real quick, and then we'll get to Jenny's 4-hour and daily. Okay. So for those of you who remember, does anybody remember what Kijun-sen stands for? It's this red line. It's based on the last 26 time periods, so we're in a 4-hour time frame. It's based on the last 26 time periods, last 26 4-hour candles. It takes the high and the low of that, divides by 2, and then that's your Kijun line here. So with that being said, what does the Kijun-sen stand for? Does anybody remember that answer? Any guesses on that? Remember, I know a lot of your names. Trend line, Rob's got it. Thank God, we are live. Well done, Rob. Okay, trend line. Exactly what it means. So, the main reason why this was created, it was designed to kind of communicate several things. One, if the angle was strong on the Kijun, then that would be telling us that the trend is strong. It's the trend line. Trend line's angled sharply in one direction. We have a strong trend. The other thing, too, is it was meant to contain price action in trends. Trends aren't always going to be sharp and incredibly one-directional or one-dimensional. They're not just going to be pushing heavy to the upside or pushing heavy to the downside. They can have little oscillations. They can kind of go back and forth, but the bottom line is a trend will either make higher highs and higher lows, or it'll make lower highs and lower lows, being a downtrend, which this is in. And in that process of making lower highs and lower lows, it will sometimes come back and retest one of the lines. If it's a really strong trend, then it will simply just test the Tenkan, and then it will blow back below it again on a downtrend. It will test it and then continue on. Those are incredibly strong trends. Those are ones where there is, 80, 90% commitment in the market at that point in time, maybe even more to one side. And there's very little profit taking. The profit taking is mild. The curvature may even get parabolic when it does that. But the bottom line is that when the pair is being hemmed in on one side by the Tenkin, like below the Tenkin and this white line here in a downtrend, it's an incredibly strong trend. Now, a steady, smooth trend will often violate the Tenkin like this one does. But what it'll do is every now and then it'll test the Kijun. Here we test the Kijun and then we sell off it. Here we actually break above it. Now, there is this theory within the trending environment, trending world, and the Ichimoku world that oftentimes trend lines will come back to a major line. That line could be a moving average, like a 20 EMA. In the Ichimoku world, that line is the Kijun line. So the market will often come back to the Kijun line, briefly break above it, but then when all of a sudden after breaking above it, instead of taking off in a new direction, it not only doesn't find new buyers, it finds a whole new set of sellers who said, hey, great, I now get to sell this at a higher price and make more money. Boom. When it does that and it slams back below the Kijun line, that is what we call another with trend pullback. So the market is still trading with trend. It pulled back to the Kijun line, maybe briefly broke above it, and then slammed back below. The pattern is always the same. It has maybe a few candles above it, and they're not impulsive by any means. They just, kind of find their way above the Kijun for a little bit, and then boom, the selling pressure that counters that break is far more swift, potent, and pointed than the buying pressure which allowed it to actually break the Kijun. That tells you that the market wasn't done selling. In fact, new sellers reemerged on the pullback, recognizing, hey, this trend is not over. We're going to stay with this. We actually saw something very similar here. We broke above it with one candle, and boom, the candle hammered back down below the Kijun. Now, part of this was news-based. For those of you that were watching, the Aussie dollar had an interest rate decision yesterday, and so that being said, with the Aussie dollar interest rate decision, every analyst and their brother, almost every analyst, was expecting a rate hike. That didn't happen. The market was quite shocked by it, and traders sold positions massively, and the pair dropped quite abruptly. I mean, this is the largest 4-hour candle in this entire stretch here. So it obviously created a serious market response. But the bottom line is, one of the consistent things you will see within a trend that is not a super sharp trend, but is a steady, consistent trend, is these pullbacks towards the Kijun, and these are with trend failure setups when they slam back below that Kijun there. That means that the market is just coming back in to sell it higher so they can push the prices lower while having lower risk. This is a very common theme. Very, very common theme in the market. You'll see it on all kinds of trending pairs that will do this. Now, we had a request from Jenny here, wherever Jenny is in the world. She wanted to look at pound dollar on the 4-hour and daily chart. So we're going to do that. All right. So, now Jenny, why did you want to look at the pound dollar on the 4-hour and daily chart? Is there something that you wanted some information on? Was there a question you had on it? Are you long or short and you're looking for some analysis on it? What is it that you wanted to find out about the pound dollar on the 4-hour daily chart? Weekly looks interesting. The weekly is actually very interesting. In fact, I write about that on my weekly market research report, which you can find on fxstreet.com or my website as well. Is there anything that you wanted to look at here, Jenny? Or no? Are you still even here? Yes? I can't even tell she's here. Is it trending or is it ranging? Ooh, good question. Okay. Let's talk about this for a second. First of all, is it trending or is it ranging? Very short term, within the last 30 hours, we are in, according to the 4-hour chart, we're in a range, with a slightly more stable top and a less stable bottom. more stable top because we have several touches on it. Less stable bottom because we have only one touch on it. So it's not totally predicated yet. But the bottom line is, in this last handful of hours, 36 hours roughly, give or take a few, we are in a sort of consolidation. It does have the appearance of a 1, 2, 3 bottom or some sort of bottoming formation with a higher low. If it were to break above this and produce a higher high, then it could be then we have the formation or reversal formation appearing at that point in time. Overall, from a medium-term perspective, we're in a downtrend. Why can I say that? Because we had a very sharp sell-off from here to here. This is very impulsive, mostly red candles, only a handful of blue. We have a consolidation that triple tops right at the 50%, and the thing went right to the 150 extension there. So it has, according to Fibonacci traders, met its target. Now, just because it met its target, does that mean it's going to stop? No, not necessarily. That doesn't mean it's going to just start a reversal or anything like that. If the trend is still strong, it will continue. This move is incredibly impulsive. Until we get a full reversal formation, we need confirmation to do that. Until we get that, we are still in a medium-term downtrend and in a short-term range. So that is my analysis based on an Ichimoku perspective. One other thing to keep in point is that this thing is now kind of being cradled by this tanking line here. It's kind of cradling it or cupping it here. So with that being said, that's kind of what's happening on the 4-hour time frame. Also, we are below the Kumo. We've been below it for a long time. We had a very brief 4-8 above it and then slammed below it. There is kind of a window for it to break through the Kumo somewhere in this region here, as this is the thinnest portion here. And this is certainly conceivable that it could enter here, but it would have to get strongly aggressive. Bottom line is that unless it does that, as time goes on, it makes it harder for it to actually break through the other side. But right now, very, very short term, it's mixed control. However, within the medium term, it's obvious the bears have control. Now, daily chart pretty much reveals the same thing. If you look at this, we only have 2 blue candles out of the last 3, 6, 9 going on the 10th candle. So we're basically 6 for 9 in terms of selling days. We do, however, have 2 important price levels below. This one and this one. This whole region from here, 58.50 to 57, is a very intriguing region here. We have a lot of tests, a lot of wicks, only a couple closes below it, or a close or an open below it. So this is going to be a very, we're coming to kind of a critical point for the pound US dollar. If the bulls really want this pair to come back and make some gains, they are going to have to do it. They're going to have to do it within this zone here. And if they don't, they're in trouble. Should the pair close below, this wick over here, we'll probably see some tests in the low to mid 57s, which is one of the last places that the bulls could really come in the market. We do have very strong rejections off these 2 wicks, which suggests there is some short-term support here. But bottom line is the picture is not exactly favorable to medium-term long. Short-term, like day trading, you do have some options. Medium-term, it's not great. Why? Because we have this lower high here. Much more aggressive selling after that. Now, hopefully answers your question there, Jenny, on that one there. Jasper says, I'm keen to go short, but not sure when to take it based on the weekly. Let's do that. Well, if you actually read my report, it talks about how we wouldn't want to take a position until we're either clearly closing above the Kumo or clearly closing below the Kumo, and we're in the Kumo right now. So from a weekly perspective, we'd not be taking any trade on that. We are inside the Kumo. So hopefully answers your question there. Jasper has another question. Does the daily have a reversal candle? I'm assuming you're talking about this one here. This yes, this would qualify as a candle which has reversal characteristics. Is it a reversal candle? It's not confirmed yet. We don't have that. We just don't have that confirmation yet. We would need today's candle to close to confirm whether it is a legitimate reversal candle or not. But this is a reversal candle formation of sorts, yes. The thing that's tricky about it is that instead of closing as a blue candle, it closed as a red candle. But these two wicks right here are favorable, suggesting strong rejection zone between 59.50 and 58.50. However, we're barely sitting above that, and so we're not quite there yet. Okay. Jasper's another question. Or convincing rejection at the low. I think I've answered that question there. Great. Rob says, I'm long at the 50% fib on the P bar, which would be this bar right here. So he's talking about fibbing it. And so you're long at 59.16. So if you're playing on a day trade type move, you got about 55 some odd pips profit on there, something like that, 53. Not bad. It'd be interesting to see what your target is on this one here. 59.16, your stop is, it'd be interesting to see what your target is and where your stop is on that one there. That would be intriguing. Okay. That would actually tell whether this is a much more palatable trade or not. Okay, Chewbacca. I love that name. I wish there was a Chewbacca sound on the Hakam here. I'd definitely put one of those grins out there now. Alright, is the thick Kumo representing lots of order flow, which can represent as large volume? Ooh, very good question. Very interesting topic. The answer to that is yes. Thick Kumos actually have a correlation to volume. That's why I actually work with a lot of option traders on the side, because volume and volatility is something that's very important to them. In fact, they trade volume and volatility just as pure elements of the market. And so the only way you can really get a thick Kumo over a fair amount of time is with heavy volume and volatility in one direction. It doesn't necessarily have to be volume. It could be low volume, through poor liquidity or something like that, but we just have very volatile price action. But generally those environments don't last long. So if the environment lasts long, if the Kumo is thick for a long period of time, generally that can only happen through strong volume and volatility. One of the other things about Kumo for the price's relationship to the Kumo for volume volatility is that the further we are away from the Kumo, the stronger the volume and volatility is. You can't have a heavy trend environment that's super far away from the Kumo and have low volume and volatility. It just can't happen. There's probably a few environments mathematically that could create it, but for every one of those environments, there's 1,000 that would not create that would never create that situation. So, out of 1,000 environments, 999 of them are heavy volume volatility, and only one of them low volume or low volatility. So, the thickness has a representation of volume volatility, and the distance from the Kumo has a representation of volume volatility. That's why environments that have very strong trending environments often are very, very far away from the Kumo. This is an excellent question. There's a whole volume of information that could be talked about there, especially for options traders regarding that. Rob says his stop is at 58.73. Fib target is 6,100. Intriguing. So you're targeting price. You're targeting the price action here. All these wicks here. You got it to 50, and your stop is at 58.73. If you don't mind me, I'm going to poke around this thing here. Here's an intriguing thought. Okay, so your stop is at 58.73. All right. Here's my question to you, Rob. This thing right here, you got the 50% fib, which is 59.16 of the pin bar. Más o menos, depending upon your chart. Here's the interesting thing about this. Why would you have your stop within the pin bar? I'm just curious about that. I'm not going to answer the question there, but I'm just curious as to why you put your stop here. Was it this? Was it something else? You said it was the 78. You had the 78.6 fib target. Was it the 78.6 retracement? just curious to why you had 58.72. It would be interesting to hear that. But that is also a separate topic, so I'll try not to get into that too much. Pin bars are a fun topic of mine. I love trading pin bars, actually. So, okay. All right, well, with that being said, moving on, I've gone over Aussie dollar Kijun failures. Talk about dollar CAD, actually. It's another pair that has been strongly trending as of late. In fact, the dollar has been trending as of late. It's been doing exceptionally well against pretty much everything, except for today. All right. Don't mind me just having some water. Okay, entonces. Since we broke above this Kumo here, this thing has been pretty much one directional. Now, there have been some signs of aging or fading in this here. One, the rounding of the angle. I wish I could draw a line that was rounding. We can see that the angle is starting to round out, or we can see it in the tops there. So we have the rounding of the angle of the actual price action. That's one thing that suggests this thing is aging. Two, we had a dip here that went right past the Kijun. Now remember I talked about on the Aussie dollar that when the pair closes below the Kijun, if that break fails and it goes back above it, that is a with trend setup. It's exactly what happened here. A failure, with trend setup, boom, the pair launched another 140 pips in one direction there with trend. This time is different. If you notice, it closed below it and it didn't break back above it. It didn't even attempt to do that. It just kept going. So suggesting that this reversal has a little more gusto to it, a little more oomph to it, a little more verve to it than the last one did. And so these are things you want to watch out for. If you're thinking, hey, I want to go long, I think this is another with trend setup, these 4 or 5 candles after have confirmed that this is not a with trend setup, it's a with trend break for now. So we need something else, some other setup to come into play to either activate a with trend trade or a full reversal in play. What is interesting to note is that this Kumo is exceptionally thick. If you look at some of the strongest points in the trend, look how far price action was from the Kumo. However, in the weakest points of the trend, we're very close to it. The thing is, this thing's got a very thick Kumo. I mean, this Kumo is right now between here and here. So you're talking about 140 pips, 150, 105.90 to 104.55. 140 pips. That is a solid and thick Kumo there. So if the pair is going to reverse, it's going to have to work. Abe was saying your chart's still showing your US dollar. We're definitely not on your US dollar. We're on dollar CAD. We've already gone through pound dollar, 4 hour and daily. You'll probably want to refresh is what you'll want to do. Okay, so with that being said, this pair is going to have to work to really reverse the move all the way from 102 down up to 107. That's 500 pip climb there. It's going to have to work really hard. Also, the trajectory of the Kumo is still strong. It's still upward, and it's just still maintaining a relative amount of thickness. If we start to see penetrations into 50, 60, 70% of the Kumo, then we have a much greater threat of it being not only a break of the Kumo, but a full reversal of this move here. But until that happens, the Kumo should offer some sort of support, which is climbing as time goes on. That plus the price bottom over here is something that should probably kind of carry the sails of this trend for the dollar Canadian right now. So just wanted to talk about the dollar CAD in a couple aspects. One, this with trend set up here with the failure on the break of the Kijun, the very sharp response after. Two, the incredibly thick Kumo that is presenting itself here. Okay, so let's see. That is dollar CAD. All right. One thing I like to go over real briefly is really a show my feathers thing. Do y'all remember several classes ago when I talked about the New Zealand dollar and how we were talking about that this break above the Kumo here is probably going to go up sort of around 7,400 because I drew a channel. Does anybody remember that? About 3 weeks ago. I actually projected the channel. It actually hadn't even got there. It was on this candle right here when it happened, and I projected that this would form a channel and touch a parallel line of this line, which I drew from here, and it did. So first of all, it did that. But does anybody remember where I said the price would probably go to and how long it would take to get there? Does anybody remember that at all? Who was at that class besides me and besides Maud and Vicky and a few others? Anyone else? Who was at that class? I'd be interested to see. Well, oh my goodness. Sorry about that. That was an alert. Alright. Did somebody raise their hand? Yes? No? I can't tell if somebody did. Alright. Anyways. We had done some analysis and talked about it based upon the Ichimoku and everything, how it would break the 4-hour Kumo chart and everything like that. And based upon that, plus the daily chart, it would be in the last week of January, between the 24th and the 28th, that it would actually come down to this previous low here, between around 69.60. I was off by about 27 pips, but when did it get there? Last week in January. I was actually a day and a half off. So 1.5 trading days off. But it did make its way down back there. So that was just kind of a ruffle my feathers there, show them a little bit. But what I would like to show on the 4-hour time frame here is that we're seeing something similar across the board with the commodity pairs. All of the commodity pairs, Aussie dollar, dollar CAD, Kiwi dollar, all showing one common component. Very, very strong Kumos. Very, very thick Kumos. So they're all suggesting that they are trying to mount a reversal here of some sort. They're trying to mount a reversal, but they got a lot to work with. What are some of the suggestions that are common that they're all trying to mount a reversal? One, they already had the same, every one of them had at least one with trend Kijun break failure that resulted in a continuation of the trend, and they all had one failure of that break reversal and have now continued to use the Kijun or something else to support. So dollar CAD in its last move had that with trend failure to the downside and then continue back up, but the second attempt has now started to break on the other side of the Kijun, spend more time on the Kijun, and now attack the Kumo. This is the first time this thing is attacking the Kumo since way back here. 20th of January, a long time ago. Seems like years ago. If this pair is going to take on this Kumo, it's going to have to do so with a lot of gusto. There is some evidence that this is in play. Why? Because we have this right here. Both the with trend setup and then the with trend failure here. But also look what it's doing. It's treating the Kijun and the Tenkan as support, which also is 50% fib. So this 50% fib is holding. That means that the 50% projection, should the Fibonacci players have their way, 7150. Now, taking a look at this last leg. This one here, I'm trying to think of which one it was. Take a look at that. The 38.2 of this entire leg is right at where this 50% projection is. So if we see price action coming up to this level, breaking into the Kumo and stalling, that would be less than a 50% penetration of the Kumo. And if it gets in there and starts stalling, it could be starting another leg down or at least a second attack back on 7,000. We'll have to wait and see how it relates to the Kumo because this is the first candle that's related to the Kumo in over 10 days. So we still need more time. We need more evidence to play with this a little bit. But the bottom line is this, along with the CAD, is flirting with the Kumo for the first time. and flirting with possible reversals. We'll have to wait and see. Jury's still out on that one there. Okay. Going down my hit list. Actually going down my case studies, I got one more. And then I want to go over my hit list for today, and then that shall be that. Okay. Yuri yen. Do y'all remember how, okay, so do y'all recognize this pattern here? You see how we have the same thing here? Break of the Kijun, false break, or with trend setup, with trend selling back in the same direction, only one candle above it, slam back below it, continued on with the trend. Same thing, rejected again. This same thing is happening here now. Euro yen is also doing what the Kiwi dollar is trying to do. It's trying to mount a reversal, and it's spending a lot more time on the Kijun. It's definitely making a good case. It's also treating the Kijun and now the Tenkan as support. The longer this thing holds above the Kijun, the more courage the bulls will have in their reversal process. So we're seeing a lot of similarities on a lot of pairs across the board. Euro yen, pound, Kiwi dollar, dollar CAD. We're just seeing it across the board here. With that being said, it suggests that there's some sort of rhythm happening in the market right now. And so I would suggest watching these right now to see how they all relate to the Kumo over today and probably the next 4 or 6 candles on the 4-hour time frame. If we start to see deep penetrations into the Kumo with all of the pairs, chances are the market is really trying to reverse. But if we see a lot of weak attempts to break through the Kumo on several pairs with all the same structural characteristics in terms of their relationship to the Kumo, the Tenkan, and the Kijun, that might be telling you that the market just really isn't convinced that this reversal is the real deal. It would be one thing if it was just one pair, but it's happening on several pairs across the board, the exact same structural formation. So we have to pay attention to that. Okay, Hardy Stacks has a question. Hi, Chris. Howdy back to you, Hardy. So what is the shortest time frame that you use? Do you find 5-minute chart relevant? Okay. What is the shortest time frame there? I'll answer both those questions. The shortest time frame I will use will be a 1-minute time frame. Now, why would I use that? I use it because I have 1 or 2 systems, actually I have 2 systems based upon the 1-minute time frame. Do I use that a lot? No, not necessarily. I use it as a very specific weapon. And so, with that being said, I generally don't teach people how to trade on the 1-minute time frame until I've worked with them for at least 6 months and really understand their trading. Why? Because I think as an educator, it's somewhat irresponsible to, this is just my personal philosophy, to teach people how to trade off of a 1-minute time frame. It takes an immense amount of skill to do that. And with that being said, if I was just to teach somebody a method and throw them out in the 1-minute time frame, it's very probable they're going to get banged up because you have to process things incredibly fast. And for me, it's a little bit easy, partially because I have some sort of tweaker mind, but the other thing about it is that I've been doing this for a long time. I've been trading, over 8 years now. I've logged tens of thousands of hours. I've seen price action formation upon price action formation to where I don't even have to think about some of them anymore. I can just look at it, kind of intuitively understand what's going on, and then make a trade on it without really thinking about it too much. That is not the same as most of the people in this classroom. Not because I'm special or smarter. I've just logged a lot more hours than a lot of people. I've been doing this professionally for a long time. And so, I make a living off of trading. Many of you are not making a living off of trading. So with that being said, I couldn't necessarily do it. It was kind of like I own a race car and somebody really likes this Ferrari and wants to drive it. And don't get me wrong, it's very honest and understandable that somebody wants to drive a Ferrari, but that doesn't mean they're ready for it. And so I can't just let anybody into that Ferrari and then expect them to handle themselves out on the track there, especially when it comes to money on the line. So, yeah, I do trade that. That's the lowest time frame I trade. But the majority of my trading is not on those time frames. And so in terms of how do I use it, I can't answer that question unless I've really worked with somebody for a long period of time. I can think of maybe one or two people that I've worked with in the last 2 years that I actually taught that to. But I'd known them for an incredibly long time. I'd seen their trade reports month after month after month and really understood their strengths and weaknesses and felt okay about it. But I don't necessarily condone it. Why don't I condone it? Because the bottom line is it's much harder to trade off a 1 minute time frame than it is off of a 4 hour. You know, everybody seems to think, oh, well, I have a smaller account, so I need to take a trade off a 1 minute time frame because the moves are smaller, so this way I can reduce the risk. But you're thinking of risk two-dimensionally. You're thinking of risk in terms of pips. You're not thinking of it in terms of position sizing, and you're not thinking of it in terms of accuracy of the system. If you think of it in just risk reward and size of your stop, that's two-dimensional thinking. We can't afford to think like that when it comes to risk. We have to think three-dimensionally. We have to think, how accurate are we going to be with this system over time? And the only way you know that is if you've really gotten familiar with the system. And so, you know, unless you can maintain a fair degree of accuracy, it doesn't matter that your stop is only 15 pips or 21 pips. If you can't be accurate, it doesn't matter. It won't matter whether it's 15 or 100. You're going to lose money. However, if you're highly accurate, it won't matter if your stop is 100 pips, 300 pips. If you're 90% accurate, 80% accurate, that stop will be meaningless, especially if you have a target that balances it out. So I don't necessarily condone people trading. I don't recommend it, especially for people that are still learning how to be profitable consistently. And what do I mean by that? 6 months plus. You know, out of 6 months, your count, you know, is greater than it was 6 months ago. This is live trading. You know, you can demonstrate that, you know, and that would be some consistency, enough in the market for me to even, you know, allow that system to be revealed. Do I find the 5-minute chart relevant? Not from an analytical perspective. Not from. I only find time frames relevant if I'm using them based on a system. Other than that, I don't find them relevant. Remember, I'm a trader. I'm not an analyst. You know, you all are traders. You're not analysts. You're not paid to write reports and not trade. You're paid to trade, or you lose money when you trade. That means you're a trader. So when you trade, the time frame isn't necessarily important. It's whether the system works on that time frame. And so do I find the 5-minute chart relevant? Sure, with a system. Without it, I don't find it relevant. I don't think it's going to mean too much. So I don't look at time frames arbitrarily or in normal perspective. I look at time frames from the perspective of a trader. If there's a system, absolutely it's relevant. If there's not a system, it's not relevant. Okay, Ashley has a question here. If you are in a long-term trend, how do you handle reversals or retracements? Just let it ride out or place opposite trade or hedge? Please explain. Ooh, good question. First of all, I never hedge my. I can't think of the last time I hedged my position. I don't hedge positions, especially trends. I just don't hedge them. Even though it seems like you're decreasing the risk, more often you're actually increasing the risk. If your original entry on a long-term trend was off, then adding another position on it into the market generally isn't going to work. Professional traders, when they realize their first analysis was wrong, they don't jump back in the same trade in the same pair thinking that, okay, well, I was off, so let me jump back in the opposite direction. No, they reanalyze the situation until they have information to do so. Retracements are part of the deal. Reversals are part of the deal. The real question is that when you took that trend, why were you getting a trend trade? Why were you getting in the trend? Why did you get in where you got in? Did you define your risk at the outset? I hope you did. And if you did all that ahead of time, has your stop gotten hit? No. If your stop hasn't gotten hit, retracements and reversals are fine as long as they don't create a price structure which completely defies the intelligence and logic of the original trend trade that you took. You know, if you're trading a trend trade that's moving 30 pips per 1 hour candle, you know, let's say you're up 150 pips and then one candle comes in and knocks out 150 pips of profit, that would make me want to reevaluate my situation. But if it's within the normal parameters of a reversal or retracement, then as long as my original analysis and the price action still confirms that, I'm still in the trend. If it hasn't hit my stop and it hasn't totally reversed the logic of it, I'm still in it. So how do I relate to him? Unless those reversals or retracements completely counteract the logic or price structure of my original decision, I stay in it. I don't adjust my stops, and I just don't adjust my stops. Period. It's the worst thing. It's probably the toughest lesson you ever have to learn as a trader. So if you're wrong, you just have to accept being wrong. Moving your stop is not accepting you being wrong. It's trying to renegotiate with reality, and the trading reality doesn't renegotiate with you. There is no negotiation. You either got it right or you got it wrong. That's it. And that's confirmed by your trade. And so that I don't adjust my stops in any sort of long-term trends or anything like that. I don't adjust my stops, period. It's just a practice I've taken on. So hopefully that gives you some sort of idea of how I relate to that. But from an Ichimoku perspective, we have some answers. You can use the Kijun line, trend line, to see if it's been violated, and if it's been violated and violated massively. Has it been violated, on the time frame that you started it? If it has, then you might want to reconsider that. If it's broken the Kumo, let's say it was below the Kumo for a long period of time, and all of a sudden we've broken above the Kumo on that time frame, that's generally considered a reversal, a legitimate reversal from an Ichimoku perspective. So there are many things that we can use from an Ichimoku perspective that will communicate to us, hey, this retracement reversal is minor, or hey, this retracement reversal is legitimate. And so I think I've given several of those examples. Can I give an example? Sure. I thought I already gave an example. Maybe you weren't here during the class, but a great example would be, again, a Kumo break. Let's talk about a very large Kumo break here. Perfect example. Look at this. We've been below the Kumo for a long period of time, from the 23rd of December to the 19th of January, almost a month. Almost an entire month. We had several rejections off the Kumo. Boom, boom, and then boom, we break through it. Yeah, I'd be considering this break here after 3 touches that it barely made it 5% into the Kumo, and then all of a sudden one move, which also happened to be a bottom off of the yearly low. It got aggressively impulsive. It broke through the Kumo for the first time in a long time. It did it with the largest bullish candle it had produced in over a month. I would consider that a legitimate reversal. So I would not, at that point I have to say, hey, my trend trade, if I was selling, is no longer valid. So hopefully that gives you an idea. Okay, we are getting curtain call, and so that's pretty much it. I want to thank you all very much for coming to today's show. I want to thank FX Street for hosting this. We went over a lot of material today. It was awesome having you all here. I just want to go down the names and thank you all for coming. Wayun, Harry, Jose, ALG Forex, 2K Pip, Zara, Boyke, William, Jesse, Harley, Wolf, Zool, Billionaire. Good to have billionaires here. I always like being in fellow companies. So, Jocelyn, MC, Linda, Pip Ryder, Chewbacca, Jenny, Joe, Hardy Stacks, Chris, Johnny, TL, Nizar, Forex Champion, Rod, Jam, Burton, Rob, Din, Franz, cool name, Mao, Adam, Peter, Abel, Kananas, Jasper, Spla, Ash, Wen, Nadir, and Steph. Thank you all very much for coming. It's great having you here. Wish you all good luck trading. I will bid you all adieu, and until then, I will see you next week. Take care, everyone.